Hey, this is Matt with PriceActionTradingSystem.com, and this is Wednesday, December the 19th. I'm just going to demonstrate a trade that I'm taking here, and as you can see, we had this little channel. It's kind of like another little spiking channel, but we had this channel working down, and we had a break of the trend line, but we've had no retest of this low yet. And here's this red line's your overnight high, the green line's your overnight. Actually, this is your overnight high, and this is your overnight low. And this was your close from yesterday, and you notice that we formed a double top right there. And so the main reason I wanted to take this trade is that I'm looking for a retest of the lows. This is the first break of the trend line. We bounced off my exit order already, but I didn't get filled. I still see no reason to exit this trade. I still think we're probably going to try to work. We're finding some support right across here, so this is important to pay attention to. But I still believe that we need a retest here. But let me show you why. Another reason that I liked it, the place that I entered here. You had this trend line working up right here. And so I'm not going to go short until we get a good setup or a break of this trend line. We really never had a good setup until this trend line was obviously confirmed. And so this is the first break of that trend line. Then we went back for a retest of that high, and then we turned back down again. So this is kind of a double top. Sometimes sometimes you may have two legs up. So I could be wrong here, but I still, we've already bounced off my order. I'm hoping this is going to go ahead and get filled, and then we'll continue on down. We'll just have to see how it plays out. But that sets up the short entry. You had a nice bearish bar here. I had my order right there, one tick below it. It got filled, and we've already exited. I mean, we've already bounced off my exit order. I'm a little disappointed I didn't get filled there because now I'd be at break even. But we'll see what happens. But I thought it was a good trade to demonstrate and to explain to you what I'm looking at. I've had a couple of emails where people are struggling with this. But the rules are simple. Until you get a break of this channel or this trend line, you don't want to be going, you don't want to be going long. And there are some longs in here on this trend line, but they're risky trades. You need to be waiting on a short setup. You could have taken this short. It would have worked out fine. I believe it would have, 39.75. And you see there was just enough there to scalp out on that one, and then we bounced again. And but once you get that bounce, then you're looking for, another thing I was looking at was this measured move. There's leg one, and then your pullback, and then there's leg two, and that's exactly where we went to. So now we've got a two-legged correction. We got a double top. We've got a break of this little trend line up through here. So a lot of reasons to be thinking short. We're struggling to go lower here. We really are, and we could turn and go back up. But that's why I liked this short trade, simply because of this trend line break, a two-legged correction, and now hopefully a retest to the low. And we'll see. And you might have been looking at that as your, something like that as your trend line, and then your break. But it just doesn't look right to me there. I believe this was the channel, and we got the break right here, and now we're trying to go lower. So we'll see what happens here. Just kind of let this play out. But hopefully you understand what I saw right there and why I went short right there. And this little bit of a stem here does concern me, the fact that we bounced here a couple of times, but that at the same time would lead you to expect that we might get a little bounce there. Now, prices you're going to have to work a little bit to get through there because you're finding support there. But if they do get through, then there's a good chance you're going to drop on down here. So, and I may end up moving this up a little bit. I figure we'll probably make a new low here. We may make another leg down like this leg right here, which would be sweet. And so it depends on how this plays out right here, but I will probably exit this runner with 3 points here if I get the opportunity to do that. And I went in with 3 contracts on this one. Going to scalp out 2. Excuse me. Going to scalp out with 2 and save 1 for a runner. People will ask me, why I use different, why I'll go in with different numbers of contracts. And usually if I've got a lot of confidence in a trade, on average I usually trade 5 or 6 contracts. And I'll trade anywhere between 5 and 10 sometimes lately. So it just depends. But most of the people that are watching these videos are not going to be trading multiple contracts. So I try to go in with something reasonable just to give you an idea of what, it only takes $1,200 a margin to trade 3 contracts. And so that's something that the average trader can use. And so that's why when I do a lot of my demonstrations, I'll do them with 3 contracts. And you see we're still really struggling. They're trying to take it down and just can't quite get it through there. But that doesn't surprise me. I think the key is going to be to tick below this bar right here, and then maybe we'll move on down pretty quickly. Catch some stops there. And that's usually a big part of it. You gotta catch those stops. Guaranteed there's a lot of people that got long in here that have probably got their stops down here. And here we go. We're bouncing off my order again. I should get filled here because we've bounced off my order several times, and I'm pretty sure hopefully I was early in the queue because my order went in instantly upon my going short here. So that's one thing I like about you'll hear me talk about it a lot with the automated strategies, is that I like them because it puts your orders in instantly. And so when you got to do it manually, you get further, once people see it turning down, then they start dropping their orders in there. So you get further doing it manually, you get further in the queue. But when it's automatic, your orders popped right in there. So and we still just cannot get through that spot. There's strong support right there at 39.75. Come on. There we go. So now you see we traded through there. My stop moved to break even instantly on my runner, and we'll see if we can catch a runner here. But again, hopefully you understand why I like this trade. This was the channel I was looking at. I could not find a good trend line by coming off the first couple of swings there. And generally when that happens, I'll run my line across the lows, and you can see that, and then I just copy that and drug it up, and you see it fits real well. So I believe that was the channel. And so you see this was the first break of the trend line here, and we hadn't had a retest yet. So, and we may not get a retest. The market may be too strong for that. And so we may not get a retest. But I believe that that's what we're trying to do, is make a retest of this low here. So we'll see. And I could manage this a couple of different ways. I could move this stop. I just got stopped out. Shoot. Now I'm wishing I'd have moved it and gave it another tick or two, because it's a good chance that's going to be a short trap, and then we may go lower. I can always re-enter here, but it gets more dangerous entering down here at these lows, so it's not hardly worth it. You want to get in up here. And a lot of times what I'll do, what I was considering doing right there, was going ahead and moving my stop maybe a tick further back. So I'm willing to risk some of the locked in profits to give this trade more room. And you can do that. But a lot of times on a choppy day like this, you're just better off to go ahead and scalp out, because you don't know what the market's going to do. And this may just end up being a range day, and we could make another leg up to the top of the range that looks like this. Or we could make another leg down that looks like this. So it could go either way. And, there's just no guarantees of exactly what the market's going to do. But hopefully you understand why I took that trade right there. We had the channel, we had the break, then we had a little trend line working up. That was the first break of it. We had a retest, and then we turned down. And there's plenty of room between where I entered and these lows. And so that's what I was banking on, was to get at least a scalp out of this. hopefully catch a runner as well, and go from there. So, and another thing you can do, you could always come back in here with a single contract just to get your runner back without risking a whole trade and go short right here if it breaks lower on a single contract. So that's another option too. I'm not going to do that. I kind of like this because it looks like we got a trap there, but it's just dangerous, dangerous, dangerous going short right here, because even if it comes lower and breaks lower here, there's a chance it could bounce, because that's what happens when you get, this is strong support right here. It's not uh, the big support area, which is down here where you've had this bigger, broader double bottom and two big bounces. But until we work through this area right here, if it continues to hold, it's strong. It's support. It's not it's not the key support area. The key supports are this high and this low, and that's why I put this. Somebody will ask me about this indicator, and the only reason I put it on there is just to make it visually easy for you to see these areas. And this was an overnight gap right here to this line. That was the close yesterday, and the 8:30 market open. Actually, maybe there wasn't a gap. I was thinking there was a gap. No, there wasn't. There was a gap from the upper side, and we came down and filled it, but we went on down lower. So I was thinking we needed to come back and fill that gap, but we didn't. So disregard that. But the main reason I put this indicator on there is just to make it easy, visually easy. And another thing we got, see this line I've got right across here, that was the highest from yesterday. So and then we tested that and made a high then. So we could be, that's an important level right there too if we come up and test it and turn down again. So you got to pay attention to all these support and resistance areas, because they do come back into play a lot of times. This was an important area yesterday because it held twice. That was the highs of yesterday. And the fact that we got above it in the overnight means nothing, because you'll see that happen quite often. But notice what happens once you're in the regular trading hours, it holds again. And so that means for now that we got to know where that's at and pay attention to it in case prices come back there. I still think we're going lower. But we don't, there's not a good setup. My setup was here, and there's just not a good setup here. Look at all this overlap. We could easily break lower and bounce back up and test this again and come back up and test this and then go make a low. Anything can happen. So that's why you don't want to just enter based on what you expect to happen. You got to get the right setup. And you don't want to be going short at these strong lows here. It may break through there and take straight off down, because that's what I was thinking it would do before. But, I got stopped out on my runner, so my trade is over, and I got to wait on another setup before I'm going to enter again. Again, you might enter there with a single contract for a runner to get yourself back in the trade, but this is not a real good setup, so I just don't like it. So I'm not going to re-enter there. But if it was a really good setup and the trend was strong to the downside, I would say it might be worth risking. But at this point, this is just a lot of overlap. Look how flat the EMA is. Market's not really trending, so anything can happen right here. So, but hopefully you understand why I took that trade. I'm just going to take that off now. Don't need it anymore. Hopefully you understand why I like that short right there. It's a double top. It's a lower high than these highs. We had the trend channel working down, very much like yesterday. It was a little spiking, and it's a little what I call a spiking channel. You spike down and then you go into a channel, and even the channel is really steep right there. So we could end up with a trend line like so right there, and you need to have that there just to be aware of it. It's a possibility that might end up being your trend line. And we'll just play with this for a minute. You drag this down there, and what do you know? It kind of fits right here. So that might end up being your bigger trend channel, and these might all be minor stuff. So just something to watch for right there. I mean, that's why I'm always drawing these lines and seeing how they come into play. But that looks pretty good right there. And again, we're coming right off the trend line. We hadn't quite touched it there. The trend line might actually be or like that right there. And that fits pretty doggone good right there. So I kind of like that right there. So just something to think about, and I'll leave those two lines there until I'm going to take this one off. I don't think this one's valid anymore. We don't need it anymore. Um, this one's really not that important anymore either, other than the retest of the low. And since I'll put my line on here so I know where my support area is. And somebody else asked me yesterday, they were a little bit concerned about exactly where to put these lines. And really all I'm trying to do is find the spot where you get the most touches, and you might even get more touches right across there or right across there. But not right now, that's the lows. I like to use the closes a lot. And when you find the last closes down here and where you get the most touches, that appears to be it. So I like that spot right there. And it doesn't have to be exact. All you're wanting to really be aware of is when you get in this area, this somewhere within a point above it and a point below it, that's where you're looking for a bounce to set up. And so you're waiting on the setup. And just like up here, you would have had your line right here on these overnight highs. And you see, then you find you did break higher, but then you got that huge reversal bar, and look at it. So that's what you're looking for, and there's your chance to go short, and look at that move down. So you're just looking for a setup, a reversal type setup in this area, and look at that reversal bar right there. That's where you go long, and then look, it was uphill all the way, and so wait for these reversals and then wait for the setup. It's not good enough just to get a bounce all the time, although sometimes you'll get a good bounce that doesn't look pretty. But what I like to see is rejection, and that's rejection. We broke up there, and that thing turned down instantly, closed on its very low. Look how bearish that bar is right there. Let me back out where you can see the individual bars a little better. Look how bearish that is. That's rejection of prices up here. And you jump in right there, it breaks down, and then boom, you're off to the races. And then it comes down here, and I showed you, that was kind of the lows from yesterday afternoon, and we made some lows there this morning. So you're looking for something to happen there, and then look what happens. You really get this double bottom, and it ticks a few ticks lower and reverses right out of there and closes on its high. Great rejection. Look, we're going lower over here, just what I figured. We did get another chance to enter. It was a little different here than what we had earlier. I should have went ahead and entered right there. Gone back in with one contract, but sometimes you're wrong, and it wouldn't have gotten its 4 ticks quite yet. It may bounce, and I may be changing my mind, but this is what I was expecting to happen. Sometimes you get a runner, and sometimes you don't. It's just as simple as that. And but anyway, back to my conversation is, you don't have to get these lines perfectly you could have had this line right here and you still get the same thing. You got to wait on the setup. Now, if you're trying to buy blindly, which I don't recommend anybody do until they got a lot of really good experience with price action. And, like I've got thousands of hours looking at this, so I'm pretty good at figuring out where the line needs to be. But you don't have to be perfect. You could have your line right here or even right there, and you still see this setup right here. So the idea is just to to kind of figure out where the highs and lows are, and then to look for something to happen there, because that's what's important about it. It's something happening there. So hopefully that makes sense to you. Hopefully, again, you understood why I like this setup right here, why I took this trade. And my guess is we're going to make a retest of this low. We'll just have to see what happens. This is probably going to serve as our chart lesson for today. So let me just talk about a couple other trades here real quick. Somebody sent me an email and says, hey, yeah, every time I enter, it bounces on the lows, and if I don't enter, it goes where I'm expecting it to. But if you're drawing your trend lines and you're entering those trend lines, there's only a couple of trades here. There's no setup right here because, look, you got to enter too low. There is a setup right here. you got this possible trend line, and if you're drawing it off those first couple of swings, you see there's a nice reversal bar. It's a breakout pullback short. You go short one tick below that, and look, it takes off. And then there's not another entry until it comes back to the EMA or the trend line again, and the entry's right there. And look, there's plenty of room. So if you're messing around and trying to enter in here or enter in here, yeah, you're going to get burned. You got to enter on the pullbacks. All your best entries will be, if you're trading with a trend, will be pullbacks to the EMA and the trend lines. Don't enter in the middle. Stay away from it. And it's just like this little temporary minor trend. This is just a little minor trend right here. But look what happened if you entered when it came back to the trend line. Each time you got a setup, it worked until this one right here. But then you got two measured legs up to a new high, and now you're looking for it to go down again. So draw these trend lines. And the key, I know some of you probably get tired of hearing me say this, but some of you don't hear it enough. The entries are always at key entry points, which are the pullbacks to the trend line when the prices are trending. And if prices aren't trending, it's the lows and highs of the range. So you're only interested in trading when prices get down here, up here, or somewhere on these trend lines. Otherwise, you're not interested in what's going on, because if you try to enter in here, if you enter low, it doesn't go low, it bounces. And if you enter short, it doesn't go very far. It's not going very far to the downside before it bounces. And it's not going anywhere to the upside, so you don't want to be buying any of this. But you can't sell this right in here either, because you're bouncing down along an important support area, and you're going to eventually get a bounce. So your entry's up here after the bounce. Here, here, and here. And that's the only three entries you could take coming down through there. And then on the way up, you could be looking for shorts. There was a decent setup here, maybe, and it would have worked. There's no setup here. You don't want to be entering here now, because now you got one, two, you got a couple of touches of this trend line. So now you don't want to be going short here. You want to wait for a break and then a retest, and then that came right here, and then there's your first chance to short, the one I just took. And then look at it. It did exactly what I thought it was going to do. I just didn't get a runner on that one, and that's the way it works sometimes. The strategy I use, that's the way it works. Now, you could have entered here and left your stop up here and sat this all out and waited on this if you want to be a swing trader, but you're going to get more losses like that. And when it does go lower, you got to make sure you hang on and get all the points you can get out of it, because you're going to have more losers by hanging on longer. I get my money and get out and go to a break-even runner hoping to get more. Sometimes I do, and sometimes I don't. And that's just the odds of the game. So hopefully you understand that. If you're entering, anywhere but the key entry points, you're taking it a gamble. You're gambling. So do not enter anywhere except key entry points. And I'll say this again. Where are the key entry points? Support and resistance. Proven support and resistance. Proven support for right now is down here. Proven resistance is right up here, and any of these trend lines that are proven as well. That's your support and resistance at the moment. And entering anywhere but those key entry points, you're taking a chance. You're taking a huge, huge chance. And so don't do it. And that's as simple as I can put it. So if you can learn and be disciplined enough to do that, again, look if you draw the trend lines, look what happened every time prices got to an important support or resistance. You got important resistance right here, and you got a double top with a trap. This kind of double top right here I like it better than a flat double top, because what happens when it ticks up here, it traps longs in, people that get long at the highs that don't know any better. And so it traps longs in. And in addition, it runs the stops on the people that have gotten short and use this for a stop. A lot of people probably got short right here. So they got their sell orders up here along with all the people, the few buy orders. And so when it ticks up here and it hits all those sell orders and it starts going down, and then these people that all bought up here, as soon as that bar, they got their stops somewhere down here and it starts hitting their stops. And that's what makes it accelerate like that to the downside. And then you get just the opposite down here on the other end. And you got a little double bottom with a couple of ticks further down, and then it reverses out of there. So that's important stuff. And so the key entry points, once again, right now is this high, this high. This point right here was important until now we've gotten through there. Now we'll probably do a breakout pullback short. That might be all we get on the retest, but my guess is we're still going to come down here and I'm thinking now we got this bigger channel, we're probably going to trend on down. We'll just have to see what happens. There's nothing guaranteed, but that's why you don't enter except at the key entry points. And you got to look for reversal type patterns as well. Even if you didn't see this trend line in the break and the retest, let's just take that off there, and I'll show you could do it all the same. You're working up, you finally make a low that's lower than some previous lows. That's your first signal. And then you go up, and then suddenly you got a double top. That's a reversal pattern in a big bearish bar, so you got a nice setup bar there. And you can get short below it, and you see what happens. So even if you didn't have the trend line to work with, just work on the patterns. And then you got the same thing down here. You make a double bottom, you tick a little bit lower, and you quickly reverse. Look what happened on this little double bottom. We went right on through there. And then you end up with like a doji. That's acceptance of prices. And then finally you get another little double bottom, but look where it's at. It's down here where there was an important double bottom low before, and you tick down there and instantly reverse out of there, and look at that big reversal bar. Now that's rejection. That's not acceptance of prices. And so you go along right there, and then you're riding this thing back up out of here. You have to be careful about going long here because of this channel. But I still think that long, based on this overshoot of the channel a couple of times here, still makes it worth taking out of there. And so it was worth going long right there regardless. This is a fairly steep channel, so you know it's not going to last forever unless we're going to get a super downtrend. And, you know, you don't get a reversal bar like that all the time. When you get a reverse, see what happened. You got another one right here, and look at that nice little move out of there. So anyway, hopefully that makes sense. And I went ahead and talked about some of this other stuff. This is going to be our chart lesson for today. We're almost 30 minutes here, so I'm going to wrap this up. But hopefully you understood why I like getting short there, why I wanted to, what I was looking for, and how you trade these key entry points. Stick to the key entry points. Anything in between is noise. And, this is obviously a nice trend down through here, and the only way you're going to get short on it is a pull back to the EMA or the trend line. Anything else is noise. Just look at it like that. Then you got a little trend working up here that broke the trend line down here. And, the only way you're going to get long, if you're even going to get long, which I wasn't, I was looking for shorts to set up. And it went further than I expected. You could have traded these longs. It's a little more aggressive, but they fit our rules. You got to pull back to the trend line. It bounces. You got another pull back to the trend line and the EMA. It bounces. You got another pull back, but then there's not really any decent setup here. Here's your first decent bar, and it never broke above it, and then it turns down. But you don't want to be going short yet, really, here, even though this would have worked. You could have looked at that as a little bit of a break and then a retest maybe, but usually you're going to get something more like this. There's no new lows being made yet. Here's your first new low that went lower than that one and even lower than that one. And then you come up and you make a double top and you got a reversal bar there. So that's what you're looking for, a reversal pattern. And then you want to get short. And again, this one was worth taking because it was the first break. But after that, there really was not a good short setup, and you got this little trend line working up through here. So draw those short-term trend lines. They won't always help you, but like any trend line, 9 out of 10 times you'll find some value in them, and you'll have a better idea of when you need to be expecting the trend to end. So They work the same on short term as they do on long term. And I can show you that over and over and over. Occasionally you'll get one that won't work out too well, but for the most part they work. So this is 30 minutes worth. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and this will be our chart lesson for today as well. So no other charts today, but I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.